Hello out there in cryptocurrency land. Welcome back to Real Crypto, where we take the market one leg at a time while keeping the market cycle in mind. And right now that market cycle is pointing lower. We're getting really close to that support of the 6,000 level, sitting at 61.69. And in the beginning part of this video, I'd like to kind of talk about Bitcoin and kind of the waning support and also the increasing distribution that we're seeing. I also want to go into Ethereum. It's monumental drop, probably one that will go down in crypto history of probably one of the biggest drops of all time in terms of a large cap coin. But let's start with Bitcoin. So first off, I have basically the parabolic top all the way to current market, and I want to talk about the general sentiment of investors. And Ethereum is a very good example of that, and we'll get to that later. But Bitcoin, being the biggest, being the most liquid cryptocurrency, really gives us the main sentiment of the market. And we know that. We know Bitcoin leads the markets up and down, okay? So on the downside, let's take a look at the sentiment of these market players. Now, you guys may have heard me in the past talk about that the market is built up of different baskets of traders. And these baskets of traders all have different things that they do. Some people buy bottoms, some people buy breakouts, some people trade Fibonacci's, some people trade moving averages, some people trade bottoms, some people buy bounces off for the 50-day. Some people trade MACD crosses, some people trade MACD failures. I mean, the list goes on and on. There's all these baskets of people. And what makes a trend is when a majority of those baskets of people make a decision that Bitcoin's going higher or lower, and then slowly it starts to coalesce into something which becomes a trend. And when that trend reverses, you start to see those baskets fight a little bit amongst each other, and that's kind of what brings on choppy markets and also causes these whipsaws and downtrends. So if you think of the market like that, which I do, you can kind of start to see things start to line up. Okay, we've also talked about people exiting the crypto market. We've also talked about capitulation and what that means in the past. And I'm not going to go into all that in this video, but what I want to talk about is what I think is people coming to the same conclusion. So here at 20,000, we had a big drop, 50% in basically 5 days, a big reversal, another big drop, a pretty big reversal, another big drop. That was the first leg of the downtrend. We since went into a smaller uptrend and had another downtrend. We had a drop and a pretty small bounce, a drop and a bit more meaningful of a bounce, then another drop. That's the second leg. And you can see what's happening is here you have these big swings, and the swings are already getting much, much smaller. On the third leg, we have a drop, kind of a sideways action, a drop, little bounce, drop, sideways action, drop, sideways, little bounce, drop, sideways, drop. So you can see right there, the upside movements are getting already much more muted. You can see this big upswings here, smaller upswings here, mostly sideways swings here, not even too many upswings at all. And in recent history here, we have the top here with a drop and a little retracement, and then basically just drop all the way down to the bottom. And here more recently we have no sideways action up here. It's just a drop. So the selling is getting more aggressive, and that tells to me that more of these baskets of traders are coming to the same conclusion that either they don't want to be in Bitcoin, they want to sell Bitcoin, or they just want to wait and see what's going to happen. We're not seeing a lot of support. We're not seeing a lot of anything on these drops. They're just drops at this point in time. And that 6,000 is coming up pretty quick. And to be honest with you, the level's not even 6,000. Let's just keep it real here, guys. We've got this level here. It's at the 58.75 level. We say 6,000 for brevity's sake, but it's 58.75. We've hit it once, twice, 3 times, 4 times, 5 times so far. We're probably going to come down and hit that a 6th time, and eventually we'll probably break it. Now, if you are of the mindset that the market participants kind of do the same thing over and over again, you can do what's called a measured move. Okay, you've heard me talk about these a lot. And a measured move is when you basically have one leg, one move from top to bottom, okay, spike high to spike low. You move it down to where we have a recent spike high, and that can give you the potential for the leg in this move. I did this over here. It didn't quite work out, but let me show you some examples of that in the past. for those of you that don't remember. This one didn't quite work out. They don't all work out. They don't have to. So there's a downtrend. There's a bear flag. This little channel right here, that's a bear flag. Okay, this implied a move here down to about 4,900. Okay, this one stopped shy. It stopped pretty much right at that prior point right there. I thought we were going to break. We did not. We actually reversed. Now we have the same thing again. And if you notice, 48.70, we're sitting right there at that same level of about 4,900 for a potential measured move. Does it have to hit there? It does not, but that's kind of what's implied. These measured moves don't always work out. In fact, this is not necessarily a major scenario where a measured move will be implied, but if you're looking for some kind of a target, here's a way that you can derive one, and this would obviously take us below the 58.75 level. But going in concert with this move, you can already see it kind of is. We have a big drop. When we finally do drop, we have the big drop. We kind of start stair-stepping lower in raised volume. We're doing the same thing over here. We had a big drop, and we're stair-stepping lower in raised volume. And we'll see if this continues over the next couple of days. Maybe we pause here around the 58.75, or maybe we just kind of walk lower through it. And those are kind of the two scenarios I'm looking at right now. And that kind of brings us to Ethereum. So let's talk about Ethereum. I want to keep... Let me delete that one. Okay, so I'm going to keep these other lines. So Ethereum has come down quite significantly from the highs. All right, I know a lot of people think it's too far, blah, blah, blah. 86%, 87% is where we are from these all-time highs. That's a fairly accurate estimate. As you can see, I just eyeballed it. I didn't do it exactly, so those numbers are going to be a little bit off and vary per exchange to look at. Now, a little bit ago, I talked about Bitcoin and taking out a resistance level, or I'm sorry, a support level. Now, obviously, this is not as important as Bitcoin's 58.75 level, but you can see right here that Ethereum's low never really paused much. Ethereum actually had a very similar bear flag to what Bitcoin had, and where I thought Bitcoin was going to break, it rallied, and Ethereum did not. So there's the bear flag in Ethereum, and while we notice that Bitcoin's bear flag, I don't think these line up. Let me double check. I don't think they line up June 30th. Yeah, they do not line up. But you can see here June 30th was right here. And while Ethereum was bear flagging up, Bitcoin was bouncing. So Bitcoin obviously having a little bit more support here. You know, there is some support. Don't get it twisted. I'm not saying there's no support at 6,000. There is. But it's just waning. It seems to be waning every time we hit it. Now, Ethereum support was not near as strong as Bitcoin's. Obviously, this level was only tested once. But you can see here, even being a pretty dramatic swing low, coming all the way down here and rallying, then coming back down to it, it didn't even but pause for one day before it finally rolled over. Bitcoin may do something very similar. And then Ethereum's most recent week action actually has an implied measured move target of about $100 in Ethereum. Actually, it looks like 96. I use round numbers for brevity's sake, is what it is. So about $100 Ethereum is, I think, what is likely in the cards, and the price action would support such a price movement. You can see we had the big break in the alts coming out of this bear flag, dropped about 40% and then paused. And if you notice, at this moment in time is when all the altcoins rallied over the past few weeks, except for Ethereum. Ethereum did not rally. Ripple barely rallied, and Ethereum just rolled right over. The second the market got weak, boom, it sold off in a huge volume selling candle, and the subsequent volume has been exceptional ever since. Even this very large green candle just couldn't save Ethereum. It couldn't even muster to go higher. I mean, not even a little bit. It just continued to drop. So in terms of sentiment, what we started talking about, you can see the sentiment in the market. You can see that a lot of things have been broken. You can see the fact that we're just rolling over, and people are giving up. People are giving up supporting, and they're going to start believing that we're going to be deeper in a bear market, and that is when Bitcoin is finally going to drop. All right, that's my theory on why the Bitcoin bounce has been so elongated, why we've hit 6,000 so many times. We just bounced it, and people just still believe, and then they don't believe. So eventually they'll stop believing, it'll stop being supported, and it will probably move lower. That's at least what is likely to happen right now. Now the counter scenario to that, and there's always two sides to the coin, ladies and gentlemen. I'm not going to sit here and tell you that I know that this is going to happen. I do not. In fact, nobody knows. But by reading the charts and the general sentiment and the lower highs, and as many times and as frequently now as we're touching this, because keep in mind we poked here and then we ended up poking again 139 days later, and then we poked again 6 days later, and then we touched it again 44 days later, and now we're probably going to touch it again 30 days later. So the frequency in which we're touching this point is becoming more frequent. And that's going to also lead to the weakness at this price level. I mean, the more time we spend down here, the more likely this line is to fail. And it's probably going to happen in time. So 61.67 right now, we're getting down to a point which we've only been a few times in Bitcoin's past. And we're happy down here. There's no major rush to go up. There's no major bounces. You can see here we paused right at about this level on the previous downtrend. Let's take a closer look at that. This is right about where we paused. Okay, so if we don't get any kind of major reversals here, if we just continue to drift lower through the night and then tomorrow's session, more than likely we're just going to continue lower. Is my general sentiment right now, and that's regardless of what the Bitcoin longs and shorts are doing. I don't even think I have them up here right now. So let's look at the longs and shorts real quick. Let me go set up this chart. All right, so I set up the longs and shorts here, and as you can see, the market's been declining, but notice the shorts haven't increased. That's actually really healthy. I discussed this the other day. I don't remember if it was in the Power Hour or a live stream or what. I've been doing a lot of stuff lately since the market kind of continues with the program. What I was saying was, if all of this selling is due to short sellers, that's not going to be good for the continued sell-off. Reason being is because if this is an artificial sell-off and it's just short sellers, then the people that are slowly selling their Bitcoin will not continue to sell their Bitcoin. It's kind of a weird thing. If they see the short number go high, then what's going to happen is they're going to think it's going to pump. They're going to kind of hold on to it a little bit longer. But what's happening is we're actually seeing some people cover shorts a little bit down here. That's actually healthier. And if you notice, the longs are declining. Ever since we had that top, look at that. Ever since even right there, the longs have been declining in Bitcoin. And we actually noticed that on the way up here. I think I mentioned that once or twice. The longs declining, the shorts declining. This is natural selling, at least according to this chart. Now, this doesn't take into account to other exchanges. This is only Bitfinex. But if we can use this as a proxy, then you can kind of see the general sentiment of the market, and everyone's just starting to believe it. The short sellers, I don't think, want to get very aggressive. They may start increasing as we break this level, but whoever put this short on right there was a very smart trader. Whoever added that short right there. Very, very smart trader. And then you can see this as we started dropping, they added a little bit more, and then you're seeing a little bit of covering from I don't know who. But so just the fact that the shorts haven't gotten any higher is actually gives us another point for the breakdown to continue. Because if the shorts were super high, we would again run the risk of a short squeeze. But right now, if you think about it, there's a huge majority of shorts up here that are in profitable positions, and they can withstand another upthrust. So let's say the market comes down here again, we spike lower, we bounce up here again, maybe we get back to 6,500 or something, and then it rolls over. The shorts may increase again up here, which would put additional pressure on the market. And if the buyers don't support that, then that additional pressure will eventually cause the break. And maybe that's what happens. I don't know. But there is a scenario where a wise short seller up here is patient, doesn't short it through the floor yet, waits for the bounce, then shorts it through the floor on the weak bounce. And that's pretty much what they did here. You see the lower green volume versus the rising red volume. It was a weak rise. They were very wise to short up there. And anyway, then you kind of see the result. So this is another scenario where a wise short could actually force the market lower. We still have a little bit of bounce left. There's still time in this triangle. Bitcoin has proven to be resilient. If you guys remember, I thought we were going to fail here, and we did not. And that actually looked like it was ready to go. Just never quite happened. So maybe we have some more support over here before we finally drop lower. And I think that's that's a decent possibility. It's not a bad hypothesis. Um, but really looking at Ethereum and its just overall weakness at 185 right now, this is really showing, I think, where the market wants to go. And just the general lack of buying within Ethereum. Most of the altcoins are really going to get wrecked over the next, I don't know, whatever time period that this takes. I mean, 185, 100 Ethereum is not out of the picture by any stretch of the imagination. There's lots of room to go. If you take this on a log scale, guys, if you auto log scale it, we're way up here. I mean, so in theory, we could pull all the way back to 16. That is not going to happen. I don't think 16's in the cards. I think 100 is pretty darn low for Ethereum, to be quite honest with you. That'll give us like what, a 90% decline. Let's do that real quick. So 93% decline in Ethereum. You've actually seen, pretty deep declines in Ethereum in the past. It's actually already dropped. I guess that was only a 59% drop. But this is a pretty extreme bear market, guys, and I would not be trying to play the hero here. Bitcoin is very likely to fail, and Ethereum is also likely to have extreme lower prices, probably maybe spiking into the double digits there. So we'll have to wait and see how that plays out. But if Bitcoin cracks, the market's going to crack right open. Someone's going to say, but real crypto, that means we're going to have sub $100 billion market cap? Absolutely. And that's fully possible, especially considering the top 3 coins can comprise of 70% of the market cap. And with this tanking, with this cutting in half, and this potentially cutting half, I'm sure Ripple's going to dive as well. And then you've already got your 100 billion market cap. So we're probably going to get down there to much lower levels unless we find some very major support. So if we don't find that major support level, it's really going to be off to the races there. But Ethereum's kind of leading us lower here. It led us lower. It didn't really lead us lower, but it showed us the weakness in the market within this pattern, and it led us lower here. So we're probably going to see a lot lower prices in a lot of coins. So anyway, guys, I've rambled enough. Thanks for joining me today. I appreciate it. I'll see you guys next time.